Hi dear students, welcome to Financial Accounting, Non-Profit Organizations Problems. We have seen the introduction part, receipts and payment account and income and expenditure account. Once if you are thorough with all these things, then we can go for balance sheet. Balance sheet is quite easy. In this class, I'll explain balance sheet pro forma. Very easy. A small difference will be there, final accounts balance sheet and this balance sheet because of the transactions only. And the rest of everything is treatment is same. So after pro forma next class onwards we'll be workouting problems, final problems, like in one problem income and expenditure account you have to prepare and also balance sheet with adjustments that we'll see. So let's get into the pro forma of balance sheet. So you know that as usual, like final accounts, assets, liabilities. What are the transactions we get? Asset side, if you see cash in hand, cash in bank, these two you need to be very careful. Where do you get this information? This information from the receipts and payment account. For example, receipts, it's not writing. For example, receipts and payment account, you will have opening balance, right? So to balance brought down, say this is 1000 rupees and some other items are there. At the end, by balance carried down, say 2000. Example, opening balance is 1000, closing balance is 2000. This is cash in hand. So this is cash in hand. Sometimes closing balance, sometimes cash in bank also might be given. If both are given, this you are going to write here. This is opening balance of cash in hand, cash in bank, not this one. This one would be last year's closing balance, but not this year. So that is why you have to consider closing balance of receipts and payment account will be opening balances of cash in hand and cash in bank. Very important point you have to remember, okay? So this is about cash in hand and cash in bank. Then after that, prepaid expenses. Please be careful. Anything paid in advance, prepaid, it's an asset. Received in advance will be liability, okay? So this is asset. Next, investments. Purchasing investments is asset. Anyway, you know this. And purchasing books also asset, purchasing books. And furniture and fittings, land and buildings, these two regularly we used to get it in the final accounts. Same treatment, furniture and fittings, land and buildings are assets. Next, closing stock. Please be careful, closing stock. Closing stock of stamps and stationery. End of the year stamps and stationery, anything is left over, that we treat it as asset. Are you getting it? In the same way, sports material also, end of the year, any sports material, whatever is left over, that everything we calculate, we show it as an asset. So both closing stock, any stock left over would be balance sheet asset. Very important point you have to remember. This is the difference between final accounts balance sheet and here, okay? Next one, coming to liabilities. Liabilities, income received in advance. Paid in advance is here, prepaid is asset. If you receive anything in advance, it's a liability. And in the same, outstanding expenses. Outstanding means payable. Payable means liability, you know it. In the same way, bank overdraft. Overdraft means suppose the receipts and payment account we have prepared. Balance is rather than debit, credit side, if you get it on the debit side, suppose say 500. So this is overdraft. To balance carried on, 500 debit side you got it, that is overdraft. Overdraft is this one. So this is 500 balance bank overdraft. Next, clear, bank overdraft. Next, legacies. Legacies is nothing but will. Only one time we get capital item. So one time when we get all these items, we consider it as a liabilities. It is to be capitalized. Like legacies, specific donations. Small donations we can consider it as income in the income and expenditure account. Big donations and specific donations will be always treated as liability in the balance sheet. So, legacies, specific donations, specific funds, a particular purpose, if you get any fund, that is also balance sheet liability. We treat it as a capital item. Next, life membership fee. Anyway, this is life membership fee means only one time we get. Capital income. One time when we receive, everything comes in the balance sheet liability. And in the same way, last, capital fund will be given in the problem. So to that capital, surplus or deficit. How do you got surplus and deficit? From the income and expenditure account. If you get a surplus, add. If you get a deficit, deduct it. Okay. Whatever you get, according to that you adjust it and write it over there. At the end, the balance sheet must tally. If it is tallying, problem is correct. If it is not tallying, something is gone wrong. Either income and expenditure account you can check it out, or otherwise balance sheet. Even adjustments, you need to be very careful. 3 ways: income and expenditure, adjustments, balance sheet. 3 sides you check it out, then you will come to know the mistake. If you want, you can write down or take a screenshot. So next class, be careful. We are going to work out entire problem. Few problems will take, so that you will become thorough and perfect. My dear students, you need to practice a lot accounts. The more you practice, you become more thorough and you become very confident also. In final exam, the hand goes simply flawless. It's because of your practice. And please go to the description box or playlist. There are many subjects already I have covered, and what is important, what is required, you just take it out. You just follow it and improve your skills. Nothing to worry. Subjects are easy. Only the thing is, use the brain and logic. That's all. So don't forget to share these videos, because sharing is caring. So stay tuned. Have a bright future. Good luck.